It's good to see, Jim. We're all trying to make sense of these, what seem like fantastic numbers, but then again, offset against what you think the Fed may or may not do and how you think that's going to impact markets over time.
I think this is really, really good market for this, really good numbers for the stock market, Andrew, here. It is just one number, and they tend to be volatile, so you got to take it with a grain of salt. But what this did, I mean, I think a real concern was building with the bond yield collapsing towards 1% on the 10-year here earlier this week, as we were down to 112. We're now almost up to 129 this morning. That is a huge turn. I think technically that's going to raise a lot for a lot of people that bond yields are done going down and maybe headed up again. And what this does more than anything is it causes a big shift in the leadership of this stock market. You can see this already where the NASDAQ's off a lot this morning, and small cap stocks, their futures are way up. The S&P's not doing much, but the undertow here has shifted towards cyclicals and smalls, and maybe even international markets to some degree, those more sensitive to the economy, and away from defensive and growth stocks, which have been leading for a while here. And I think that's the undertow. I think the other thing this does is sort of calm down these COVID fears a little bit and reminds people that there's still an incredible fundamental story here going on, not only being reported by company earnings, but now on Main Street as well, and calm some of those fears. Yeah, tightening's going to come at some point, but I'll tell you what, when we're growing earnings like we're growing them, and we have a sub 1.3% 10-year Treasury yield, Andrew, I think we got to get some tightening in the system before the stock market's going to run into real trouble.
So, Jim, though, this is backward looking, though it's good news on backward looking. How do you think about Delta in terms of the fall, in terms of the winter, in terms of what it means actually to small businesses? Because one of the things we did see, the past couple of weeks is some of the growth stocks, some of the tech stocks actually got a little bit of a bump because people thought maybe that's where the action's going to be.
My first response, Andrew, is I'm tired of trying to act like a virus expert. I really thought maybe we were getting close to get beyond that here. I still think Delta's a risk. There's no doubt about that, the Delta variant, and now they got the Delta Plus variant, and there's others coming behind those. And that could come back to roost yet. I still think you probably have to reduce your growth estimate for the rest of the year a little bit. But what is good here is we're coming off 12% year-on-year growth, or year-over-year growth in real GDP. If we slow to 5 or 6, that's still growth that's almost twice as great or more than what we've had for the last several decades. And so I think Delta could continue to haunt us, if you will, at least until we get all the kids vaccinated down to age 0, and that could well be into early part of next year. But I also think that the fundamental growth here is so strong, not only for job creation, but income generation, spending, earnings, that we can handle if the Delta is going to slow us down a little bit, and I think still be okay.